Hello Jags, Fahad here. An interesting article came to my attention on March 19 in New York Times. This article talks about the city of New York reopening its legislation to basically install speed cameras in from 140 of its school systems currently to 750 school systems. Now a little bit quick background about this whole thing. Way back in 2014, the city of New York installed a pilot program in which they installed these speed cameras in 20 of its 750 school systems in the city. The pilot program was quite successful. So by the summer of 2018, this program had been gradually expanded to include 140 of the 750 schools in New York City with speed cameras. The results were also quite remarkable. As of last year, the article reports that the city had seen a 63% decline in speeding in the school zones, a 17% reduction in traffic injuries, and the average number of deaths each year in school zones with a camera fell from 18 to 8. Quite remarkable results, right? Except something interesting happened in July of 2018. That was when the Republican-led state legislature body basically decided to kill the program entirely. And so all these cameras in all 140 schools at the time completely went dark. Disgruntled or not, Andrew Cuomo, the governor at the time, in August of 2018, signed an executive order to basically reopen these cameras for surveillance in these 140 schools, even though at that time he did not have the legislative support. That legislative support finally came on March 19 when the state was able to find funding to basically expand this program, not only from the existing 140 schools to basically include all 750 school systems in the New York City. When I read this article, the first impression, as inquisitive, as curious and observant I try to be with almost everything that I read, the first impression that came to my mind was there has to be a trade over here. What is this company? Which company is it that is basically providing all these surveillance systems and cameras in all of these schools, and what kind of money they will generate from this? Today I finally have that answer. Yesterday, a small little tiny company, actually not quite small, a $2 billion market cap, small cap company called Verra Mobility, symbol VRRM, reported earnings. This is the company that is the exclusive provider of these speed camera systems to New York City. Now, as I said earlier, the program, now that the legislative body has passed it, will be expanded from 140 school systems to 750 school systems as soon as possible, potentially within the next 1 to 2 years. So let's do some math around it. According to the company, the company reported total of, in the first quarter, $98 million in revenues versus $93 million in street expectations. So very clean beat. EBITDA margins expanded and everything. But none of that basically included any kind of upside from this legislation that was passed on March 19 because it has not even fully kicked in yet. Most importantly, the companies basically did not raise its guidance. Even though the organic growth was quite impressive at 12%, they did not include any upside from this legislation that was passed. But they did quote us and gave us some numbers to basically work with to see what kind of upside should be coming in terms of total revenues for us. Of that $98 million that the company posted in terms of total revenues, $36 million of that comes from the government services, which is exactly this business, the speed cameras. They're installed in traffic lights, they're installed in schools, and a whole bunch of other places. The company at the end of the first quarter had a total installed base of 4,604 cameras. Now, interesting thing is that this is a recurring business model. So the revenues basically continue to be generated for the service the company provides with these speed cameras on a quarterly basis. So let's do some math around it to see what kind of revenue upside will come, even though company did not raise its guidance while acknowledge that this program is now currently effective. If you take the $36 million of total government services revenues that were in the first quarter and divide that by the install base of 4,604, you come to about $4.8 million in terms of you come to about $7,800 per quarter per camera system for this particular division. So with that number in mind, you take the 750 school systems minus the 140 that is already the installed base for the New York school systems. That's 610 delta. Multiply that by $7,800 per quarter. You will find out that the total opportunity that now is open for the currently just in the New York City equates to about $4.8 million per quarter, or almost $20 million upside for the entire year, fiscal year 2019, assuming all of these will be placed by the end of the year. The company for this entire government service business for the first quarter reported $36 million. So if you analyze this, this represents about 15%, 14 to 15% upside to revenues just for this one government services. The interesting part is that the company just didn't stop over there. This New York program, because of its success and because of its legislative body now expanding it to all school systems, is basically setting the precedent for other localities to basically follow along and initiate the similar kind of program. I have some confirmations around this. So for example, here is the Center for Digital Education. This is the law that was passed in Georgia in July of 2018, and Georgia law is now open the school zone for traffic enforcement cameras, and this is the company Verra Mobility, symbol VRRM, that will be providing these. We do not know exactly how big that order will be and how many schools and how many cities and in the entire state that this will cover. Similarly, here's another one. This one comes on the back of a strong performance in Washington, D.C., which started installing these cameras in 2017, followed by Maryland in 2018, and now Virginia is basically following the same path. Virginia-based legislature has finally gone into effect, and we still do not know exactly what the size of this program will be. But once again, none of this baked into consensus view, but this went into effect in February 2019, only 2 months ago. Not baked into consensus view, and management did not raise guidance. So my conservative estimate just from the New York City alone is essentially $20 million upside in revenues on an annualized basis. And once you add Virginia, DC, Maryland, and a whole bunch of other states joining, the numbers could go materially higher from there. And I believe none of that is baked into consensus view. That was the first bull case. The second bull case on this stock has to do with its commercial business, which is about 65% of total revenues. Keeping this very short and quick over here, if you dissect the last earnings report, the first quarter that came out, management mentioned that management reported a sequential improvement from the fourth quarter of 2018 to the first quarter of 2019 in the commercial business. Why? Because more and more toll booths and more highways are starting to install their speed camera system. And one of the biggest beneficiaries of that are the adoption rates that are coming from Hertz and Avis, as well as other rental car services. This business still has tremendous amount of penetration to do in the United States. But interestingly, management commented in the first quarter earnings call that the same exact kind of speed cameras tolling program will be launching in France in the summer this time, particularly around July this time, and then Spain and Portugal will follow in the fall of 2019. Management believes that this could potentially add another $18 to $20 million in total revenues on an annualized basis. And once again, this is also not baked into consensus view because they did not raise their guidance. So another good tidbit over there. And then the last one, watch this one 1-minute video of the company's brand new product that was launched late 2018 called Peasy.
1, 2, 3, 4.
You don't need no fancy things. Sports car or diamond rings don't mean a thing. I could sing of the stars above, dance with kings and queens and stuff, but it would be better if we did it together, you and me, like the sun and the sea, hand in hand we will be. They won't watch us create history. I could travel the world and see, but nothing could ever be like being with you together forever.
Basically, if you live in a state where there are a lot of toll booths, like when I used to live in Chicago for 10 years, I always used to have this transponder that would be on in my car, inside my car, so I can basically go through these speed toll booths and never have to stop to pay the tolls. Well, those transponders are now being replaced by a phone app, and this phone app called Peasy, created by this company, is essentially an answer to that. Pretty simple, and it's also a subscription-based business model with $40 per year subscription, which is similar kind of fee that you pay for transponder, except you don't need to use transponders anymore. This was launched in late 2018, and so far very minimal amount of revenue are being generated from this particular program. Management is hopeful, and in their earnings call they pointed out that this would potentially start to add up to about $15 million in incremental revenue opportunity for 2019, and will only accelerate from there going into 2020. So three-part bull case over here. One, that has to do with the government service opportunity, having to do specifically with speed camera installations in school systems, starting from New York City and expanding into many other school systems in different states and cities. Number two, the commercial business is doing quite strong on the toll roads with the speed camera installations, and France and Spain and Portugal and a bunch of other European Union nations will be coming online later this year. And number three, this launch of product called Peasy. By the way, Peasy was also recently did a collaboration with another app called Gas Buddy, and then another app called Arrived. Both of these are incremental, small little positive for that particular business as well, that I think could provide further upside. Add all of these incremental opportunities come together, I could see $50 to $60 million in total revenue upside on an annualized recurring high margin basis by the end of 2019 versus where the consensus is currently. That's about 15 to 20% upside on the revenues. Considering the stock is trading at less than 4 times its next year's sales, so pretty low in valuation, I believe you may see multiple expansion as well as earnings expansion from here. Lastly, if you look at the chart, when the market was falling apart yesterday because of trade worries between US and China, this stock was powering higher, closed at the highs of the session yesterday with a power candle finishing up 6% on the session. A very simple trade over here is to basically put a stop loss at the lows of yesterday, which was before earnings came out, at $13 even, and basically continue to ride the momentum higher with all of these launches coming one by one the rest of the year. That's it from me. See you next time.